Welcome to 5 at 5 with Stone Law Offices. I'm attorney Brendan Bybee with 5 minutes on gifting and when and how to make your gifts. You have lots of property and lots of people who you care about, who you want to leave things to. And you may give gifts to them during your lifetime or at death for different reasons. And what I'm going to go through briefly is why you might choose to make a certain gift during lifetime versus at death, and vice versa, and how you go about making those gifts to avoid complications, avoid failure over that gift and disputes and that kind of thing. Now, in the first place, just dealing with ordinary pieces of property, maybe of not terribly significant value, things that aren't going to cause some tax issues, which I'm going to talk about in a minute. This would maybe be small items of personal property, a dresser, a painting. Again, most of us don't have Picassos, but things that are, relatively modest in value, things that we might give to somebody on a special occasion. And do we give them this property now or later? Now, assuming that you've decided you no longer need to maintain possession of that property, that you would like to make that gift, what are the considerations about making that gift? Maybe you have a piece of jewelry or some other kind of heirloom that you want to pass down. Now, certainly you can leave those gifts for later and let beneficiaries kind of negotiate and argue over who gets what. That's perfectly fine. Many people do that. But if you do want to give somebody that gift, what are some considerations? One is, do you make that gift during life or at death? Now, if we're dealing with relatively modest value and we're not dealing with a capital gains tax issue, then there's not much of an issue versus giving it in life or giving it in death. Obviously, giving it in life has the benefit that you're able to get the benefit, the good feelings that come with giving. You're able to see the person, see their face, receive their gratitude upon making that gift, and that certainly has a lot of value to it. Now, the issues there are fewer. They're not as complicated in terms of tax purposes, but we're dealing with people with expectations. And so if we are passing something such as a family heirloom, something that maybe is wanted by more than one person that you're close to, is particularly children. So it's an item that might be of dispute if it were left for them to decide. How should you pass that on if you're making a lifetime gift? Now, it's the same whether it's lifetime or death in this case, who you're giving that to. And particularly that is, you want to make sure that you're making clear identification that this is a gift. The primary issue with making a lifetime gift of modest property like this is that if there is dispute over it, there could be a few things that might arise. One, if there is a later disability, perhaps dementia that comes on for you later on, you might not remember you made the gift or might think you have done something different, and that can raise some concerns among parties if there's not a lot of trust between the children. That somebody may think that the person you gifted it to coerced you, or that you didn't actually make the gift, there was a misunderstanding. Particularly when there's going to be or expected to be a dispute over the property, the best thing that you can do is just make sure you document it. Document that it was a gift and when you made it. That way, if there's a dispute later about that, perhaps if you forget or you have declining competence, declining memory, and you tell somebody else that they can have it, but you've already gifted it away, then you can avoid disputes by having that just a simple writing that says that you made that gift on that day. This can also then protects the person that you're giving the gift to, establishes that as a gift, and hopefully avoid those concerns. Now, moving to the difference in other gifts of value and why you might choose to give those during life or during death. Here, the main issue, if we talk about tax issues, we're talking about capital gains. So capital gains tax is owed any time you realize a gain on property that you've purchased that's increased in value since that purchase. So primarily, you might think of your home. You buy your home at $200,000, and later on in life, it's now appreciated, it's increased in value, and now it's worth $400,000. Well, if you sell the house, absent any tax exclusions, if you sell the house at that time, then you're realizing $200,000 in gain. Now, most of us don't maybe not realize that is a capital gain. We may not think about that as taxable, because for most of us, when we sell a house, we sell our personal residence, we get a tax exemption that clears out any tax. So for most of us, we're not paying a tax at that time. But that's essentially how capital gains works. So if there's any other property that you've acquired, that you've purchased, and you want to make a gift of that, then one of the things to think about that is, has it increased in value since I got it? Is this something that's going to be part of an income tax issue here? Because the difference becomes, is that what kind of value am I conveying to the beneficiary when I make that gift during life versus during death? Now, if you've got property that you got for a really low price and now it's got a much higher value, then you've got a large gain, capital gain that could be realized there when the property is sold. Now, that tax isn't going to pass on to your gift recipient when you make that gift, but if they then later sell it, then they're going to have to pay the tax that you would have paid if you had sold it. Now, that's what happens when you make a gift during life. What you have is the tax basis, which is the cost that you paid for it, plus the difference between that price and the price that the property then later sells for is the gain. And that's where the tax applies, is against that amount there. So if you make a gift during your lifetime to a beneficiary, to a person that you want to give that gift to, then when they sell the property, they pay the tax gain tax on the gain that you would have realized if you had retained the property and sold it yourself. Now, there's a benefit when you have property that has gained a lot of value since you acquired it, to passing that property at death. Now, yes, everybody has to wait until that time. Hopefully nobody's counting the days, but the benefit of waiting until death to pass that gift on is, instead of having that big gain and passing it on to the next generation with that low cost basis, so you have all that gain realized, is what happens is the tax basis, the cost basis of that property. So the number that's used for calculating gain is now jumped up. And it's jumped up to the value of that property on the date of your death. Okay, so say we're not going to deal with your personal residence where there might be an exemption. Say you have stock in Apple and you bought it at $100 a share, and it's increased in value. Now it's $1,000 a share. And if you gift that during life, now your beneficiary is going to have to pay, for that $900 per share gain. If you pass it at death, and and the value of the stock is $900 per share at your death, then bam, that's the new cost basis for your beneficiary. If they then turn and sell it, then they're dealing with, first, what's the cost basis? $900 per share. What's the price of the stock now? Well, if we're talking about right after your death, reasonably close to that, we can say it's pretty close to probably $900 per share. And so effectively, if you pass that property at death, there's no capital gain that's going to be realized by that beneficiary when they then sell the property, or at least, if they sold it immediately, theoretically, they'd have no tax. Obviously, if they take that and it increases up to $1,000 per share, they're only going to be paying on that $100 per share gain between $900, the price that it was at your death, and $1,000, the price at the time that they sell it. So again, with all gifts, if there's any reasonable reason to expect any dispute, make sure you document that gift so nobody can question whether or not that was intended as a gift, and save a beneficiary the pain and difficulty of having to defend themselves if somebody accuses them of going into the house after your death and taking it. And consider, if you have property that's gained a lot of value since you first acquired it, and perhaps for the benefit of your beneficiary, save that gift, make that gift in your will or trust, and pass that to them at your death so that they can have the capital gains benefit of that basis step up. If you have any questions about your own estate and how to plan around this, perhaps help making those gifts, please give us a call at Stone Law Offices.